Hello and welcome to TransUnion's podcast series. Thank you for joining me. I am Priven Mudli, Solutions Advisor for TransUnion Africa. We welcome you to today's discussion around how comprehensive risk scoring can enable access to funding for SMEs within the Kenyan market. The importance of SMEs within the Kenyan market can be underestimated. They provide for 25% of the country's GDP, as well as provide half of the country's workforce. They're a key strategic drive for the country within their 2030 vision. The low penetration rates of SME funding within the country is due to the inability of credit institutes to provide proper assessments of SMEs during the application phase. This has been countered in developed markets by using comprehensive risk solutions. The inability comes in two forms, one being inaccessibility of data and the other being the cost of assessments that need to be done on SME entities. SME entities within Kenya apply for very small loan amounts. The cost associated with doing assessments against these loan amounts is independent of the loan size, which makes it very difficult for credit institutes to conduct assessments on every single entity that comes through. The challenge of providing low-cost SME assessment solutions has been successfully addressed by high-income countries such as the United States. They've achieved this success by using comprehensive risk management solutions that leverages layers of credit scoring assessments. The problem of adopting similar success within the Kenyan market is that financial institutions have not embraced comprehensive scoring solutions like these high-income countries have. The challenge is to get Kenyan institutes to embrace this comprehensive risk scoring methodology. One of these methodologies is using a consumer risk score to assess the owner's ability to pay back loans in their personal capacity. There's vast empirical evidence that shows where stress builds up in a consumer's personal capacity, that this quickly translates into stress into the business default risk. These stress points picked up in a consumer's personal payment profile gives you a comprehensive suite of assessment that can be used in assessing SME funding. Hence, this consumer score can be used in conjunction with traditional SME assessment tools to provide a holistic risk assessment solution. The principle or consumer score, as you traditionally know it, gives you the ability to assess whether the owner has significant amount of stress in their personal capacity and whether or not this will be carried over into the business environment. This holistic approach gives you that comprehensive risk assessment tool that's required to mobilize funding within this market. There's various benefits to this, both to the lenders and to the SMEs themselves. The benefit to lenders is that they can broaden their client base, develop innovative and new product solutions to meet the needs of the SME market, as well as effectively and efficiently assess SME funding upfront. The benefits to the SME market is that they now have access to this funding on a much more broader scale. It also gives them the opportunity to access funding that is priced and tailored towards the risk of their business. Another aspect that can enable greater access to SME funding is by much more accurate and comprehensive data sharing. The issue arises whereby the majority of SME funding occurs in the informal segment of the Kenyan market. Savings, credit, and cooperative organizations, also known as SACCOs, hold a lot of this information and will be a key part in mobilizing this data to create access to funding for the SME market within Kenya. At a government level, Kenya holds vast databases on SME lending. Unfortunately, credit bureaus don't have access to this information. Providing credit bureaus access to this information will allow these credit bureaus to apply advanced analytics on top of these databases, which are comprehensive, but are valuable in terms of the insights that can be derived from these analytics. The Kenyan economy has massive potential if access to SME funding can be mobilized to a greater extent. This can be done by utilizing both comprehensive risk management solutions, as well as data available through government databases, and through the informal sector comprising of SACCOs. SMEs can have greater access to funding, and through this they can drive the economy and increase employment. Thank you for joining us today. I hope you've enjoyed this podcast. If you have further queries or questions, please do not hesitate to visit our website. Goodbye.